Hi there. In our last episode, we discussed the rationale behind the new tax law and how Nigeria positioned its fiscal system in tandem with global standards. Most especially, we reviewed two nations that had fragmented fiscal system that was low economically and how they emerged victoriously, as referenced by the IMF and OECD. Today, we'll be discussing the brains behind the Nigerian tax reform and the efforts that they put into place to achieve this new law. Today, we'll be discussing the brains behind the Nigerian tax reform and their efforts that they put to achieve this new law. In mid-2023, Nigeria's financial reality was grim. The country was running on a tax-to-GDP ratio of just about 10% and one of the lowest in the world. Worse, citizens and businesses were drowning in over 60 official taxes and more than 200 unofficial ones. The street collectors, local government thugs, competing collection agencies were all demanding a cut, squeezing the economy dry. Now, President Bola Ahmed Tinubu knew that to save the economy, he had to completely overhaul the system. But instead of appointing a career politician, he went after a technocrat. On July 7, 2023, he announced the creation of the Presidential Committee on Fiscal Policy and Tax Reform. To lead it, he appointed Taiwo Oyedele, a highly respectable tax policy expert and former PwC Africa tax leader. Taiwo Oyedele didn't just fill the room with tax lawyers. He assembled a diverse, powerful coalition of minds, which included Zak Adedeji, the executive chairman of the Federal Inland Revenue Service, now known as Nigeria Revenue Service. They provided the institutional muscle. Student and youth representatives were brought in also to ensure that the country's digital-first future was factored in. It will interest you to know that among the committee members was Uriri Agbaje, an undergraduate majoring in international and monetary economics, while simultaneously preparing for a professional accounting certification. The representative of the Attorney General of the Federation, because pulling Nigeria from 60-plus taxes down to a single-digit tax regime meant fundamentally challenging all laws. Also, top constitutional draftsmen from the Ministry of Justice had to sit in the room. They ensured that unifying tax collection didn't illegally violate the constitutional rights of the Nigerian citizens. Representatives from Central Bank of Nigeria and Debt Management Office, key directors from the CBN's research wing, and monetary policy experts were the Nigerian Economic Summit Group and the Manufacturing Association of Nigeria were also integrated. Their job was to aggressively fight for private industry, ensuring corporate tax drop was locked in and that manufacturing sectors weren't crushed by the consumption tax changes. Elite corporate tax attorneys, senior advocates and tax partners from Nigeria's top-tier commercial law firms such as Aluko and Oyebode, Banwo and Igodalo were present, worked as technical consultants on the legal syntax of the Nigerian tax bill, ensuring that there were no accidental multi-billion naira loopholes left behind. Their core philosophy was tax the fruit, not the seed. They wanted to protect low-income earners and small businesses, while aggressively using data to ensure wealthy individuals and major corporations actually paid their share. The real drama began when the committee stepped out of the boardroom and into the field. This wasn't a peaceful feedback tour. It was a series of high-stakes, tense negotiations across the country. The biggest friction came from the subnationals. Nigeria's 36 state governors and the local governments were highly protective of their constitutional powers to collect local levies. When the committee proposed the Unified Revenue Service, meaning a single harmonized window for collection to eliminate duplication, the governors revolted. Key regional leaders argued that there was an infringement on federalism and that states would be starved of immediate cash. It took intense closed-door midnight meetings between Taiwo Oyedele, FIRS boss Zaka Dedeje, and the Nigerian Governors Forum. The committee had to prove through data models that a unified digital system would actually increase the total pool of income collected, and they promised a transparent, real-time automated system that distributed the state's share instantly. The next pushback came from the private sector. The Manufacturing Association of Nigeria, MAN, and corporate leaders like Aliko Dangote and Tony Elumelu had long complained about the multiple taxation killing the industry. During the consultation, the business community maintained that they would not support any reform that increased the corporate tax rate. They argued that the higher rates would force remaining factories to shut down or flee to neighboring countries like Ghana or the Benin Republic with lesser tax rates. To get everyone to sign off, the committee had to make massive calculated sacrifices. They decided to entirely exempt small and micro businesses, companies making 50 million naira or less annually, from various foundational levies. This meant the government knowingly sacrificed billions in immediate, short-term revenue from millions of businesses, while wagering that the relief would allow these businesses to grow and pay more tax in the future. The then FIRS, now NIRS, itself had to undergo a massive internal restructuring. It had to stop acting as purely enforcement agency and transition into an automated, customer-focused revenue service. Then the drama exploded in the National Assembly. Lawmakers locked horns over the money generated. Regional interests clashed fiercely over who should pay a bigger slice of the VAT pie. The states where the goods are made or the state where they are consumed. To break the deadlock, the president's economic team had to lobby Parliament extensively. They warned the Joint Committee on Taxation that either the state system is consolidated or Nigeria will continue borrowing trillions just to stay afloat. In the end, cold, hard data and heavy political compromises won. The National Assembly passed the harmonized bill into law, officially ending our chaotic tax past and launching a streamlined single digital tax era. Passing the law was just the first battle. To truly understand this new era, we have to look at the wreckage it left behind. In our next episode, we'll open up to the legal engine room. We are breaking down the exact component of the new Tax Act and revealing which archaic laws were completely repealed, which powers were revoked, and how dozens of confusing acts were finally consolidated into one. Stay tuned. I am Dolapo Obafunmi, and this is Tax TV.